prices just go.
With us here in Morning at NTV, as we do continue on with the discussions for the day, we get to look at our Kickstarter, which is going to be focusing on something that will actually affect you in the near future if honorable members of parliament find it and deem it best for you to be affected. We're talking about examining the 2025 tax amendments. Are the proposed tax policy measures modest to you, the Mna Uganda, listening in to Morning at NTV this morning? I am Priscilla Regina Naroga. Now, the backbone of it is that government has unveiled plans to raise over 2.42 trillion Ugandan shillings in revenue from new tax bills and Uganda Revenue Authority administrative measures. This was on Thursday, the Finance Committee passing a raft of laws under the Appropriation Bill of 2025-2026, which has interesting developments for small and medium-scale enterprises. And of course, once passed by the House, you will be seeing a lot of changes which you need to brace yourselves for and see how you'll be able to navigate and comply as a tax-paying citizen. Now I'm joined by Juliet Najjinda Mutabaazi, Senior Manager Tax Services with the PwC. Good morning to you.
Good morning, Priscilla.
It's a pleasure to have you.
Pleasure to be here.
So she's going to be our expert in breaking down these amendment bills and the translation thereof to different sectors and markets of the country. But we also do have a legislator on the table with us this morning, Honorable Agnes Apea, Woman MP Amolator. Good morning to you, and you're most welcome.
Thank you, and good morning, viewers.
Yes, and how will people of Amolator receive these bills as you're representing them in Parliament?
I think, first of all, my people should appreciate that the government of Uganda funds its social services and all the roads, the hospitals and all that through revenue generation from the taxes.
Okay.
Although taxes are all often seen as a deterrent, as a, it has its negative part as well. But I think as a country and as a citizen of this country, we should appreciate that government comes up with some innovative measures upon which they can generate revenue that can then give us the services. So my people should sit and relax that we are trying our best and supporting government in the best way we can to ensure that we have revenue that can fund our social services.
All right. Yeah. Julie, on that case, before we look into the future, we must assess the present. I know that, of course, there's some that were passed for the current financial year that we are in. We would like to hear of you how they've been able to perform in terms of compliance on either side.
All right, so there's a number of, last year we saw a number of bills that raised hairs and, where government was looking at taxing things like, land and different kinds of assets.
Real estate,
and that caused a lot of, tension. But this year we are seeing that there's a lot of stability in terms of the proposals that are being forwarded to Parliament. We are seeing that there's almost very many more increments that have been proposed to the tax framework, and that is something that is good because the government has promised that through the domestic revenue mobilization strategy they would ensure that we have a stable tax policy, whereby if a tax policy is proposed, they give it at least 3 years for it to be tested by the economy. So it's a good thing that this year we are seeing that there's almost very few new things that have been proposed. And even when you look at some of the ones that people were starting to get really agitated about, like the fuel tax, the excise duty on fuel. We saw the minister coming up the other day and saying that that is going to be recalled before it is even debated by Parliament, because last year there was an increment of excise duty on fuel.
Are we taking us for a ride? By the way, on that note, Honorable, what is the point of us having, telling Ugandans that as of beginning of the year, could be handling anything fuel related to the country, and then you're giving us a proposed bill that is seeing an increase in tax?
No, I think you need to appreciate the time frame upon which we process the budgets. Now from down there, it is a January or a February or March, it's a beginning of the year. But in our budget, framework approvals, it's this period where we receive these tax bills, when we are almost towards the end of the budget. And before we approve that budget, we always task the Ministry of Finance to tell us where they're getting the money. And I'm glad that, like, for example, the fuel that was recalled, you also realize that I've been sitting on Finance Committee for the last, I think, 4 years. And even budget now 4 years, no, 2 years for finance, but I've been in the budget for 4 years. Now, the idea is that as Parliament and Minister had told us that we are going to minimize as much as possible to introduce new tax, which we think can actually affect the overall economy performance, you know. And so when the fuel was actually not yet brought, and we saw it from the media, I'm glad that the minister actually recalled it. So most of these proposals, if you see, which I think we're going to delve in a bit details, is basically around how do we ensure that we promote value addition for our local products, we ensure that we address the issue of import substitution, but at the same time we're also generating revenue. So basically it's really not like the government is coming at the beginning of the year, it's increasing tax. No, I think it's the timing of that budget processes that appears to be that it is a beginning of the year. Exactly, it's the beginning of the year and we're bringing in new things and all that. Okay. So I'm glad that they actually recalled that fuel tax, because as people's representatives, tax determines is really a drive. I mean, not the fuel is a driver in so many. To our economy, you go to border, and exactly if transport increases, you're sure that the price for sugar or soap, for example, in Amolator, which is really far away out there. So fuel, we've always had issues that anything that we know will affect the common person's capacity to earn income or reduce the purchasing power of the citizens. As Parliament, we're always very keen on some of those areas.
All right, so some of the proposed bills under Bills Supplement number 5 include Income Tax Amendment Bill, the Value Added Tax Amendment Bill, the Excise Duty Amendment Bill, and then we also do have the Tax Procedures Code Amendment Bill, and also the Stamp Duty Amendment Bill. Now, Julie, I would like to ask you to give us an extensive breakdown of each one of these amendment bills.
All right, thank you, Regina. We'll start with the income tax one. And like we've said, this year the bills have introduced very minimal taxes. And even where there's an introduction, you'll see that it's mainly because probably those sectors have been stable for a while. So for income tax, we're seeing an exemption that is being proposed for businesses that are going to invest at $500 million shillings or below, with effect from 1st July 2025. So that means that if you're an SME, you have 500 million shillings to invest, then there's an opportunity for you to take advantage of that exemption.
Okay, let's take it one by one and break it down, because the masses are going to be affected by this misinformation or information. So when you say that a business or a startup by 1st of July 2025, does it mean that one that is newly opening up as of 1st of July, or does it also apply to existing startups?
So the way the bill has been worded is that it looks at an investment of up to 500 million shillings. So you may be a new startup and you're putting 500 million shillings or below, or if you're an existing startup, an existing business, you should also be able to demonstrate that you're investing that much. There are other conditions that the government has put. You need to furnish information to the Revenue Authority for them to confirm that you have met that criteria, and also your tax compliance history is one of the things that they will look at to see that you're able to benefit from that exemption.
All right. Let's talk about the other elements in that income tax.
So the other thing away from the income tax bill, we are seeing the Tax Procedures Code. We have the renewal of the waiver of interest for people who pay their principal tax by 30th June 2026. So what this means is that if, for example, you're late on paying your taxes, and you find that ordinarily the taxman would expect you to pay the taxes with interest. Say right now we are in 2025, and you did not pay your taxes as at 31st December 2024. If you're going to pay that tax now, you'd be required to pay the principal tax plus interest. But what this bill is coming in to propose is that people who pay their tax that was outstanding from historical periods, and that tax was outstanding as at 30th June 2024, and you pay it by 30th June 2026, then you'd be the respective interest and penalties would be waived. The other...
So let's first pause on those two and analyze them. As one who sits on these committees, when you look at the income tax amendment bill, of course, this sounds like good news for the people who are starting up businesses. What is the actual spirit behind this proposal?
For this particular proposal is that when you look at the detailed bill and the object of this bill, you'll see that government wants to increase or strengthen entrepreneurship in the country. The other aspect also is that you're aware that our country is private sector led, and we've talked about it for quite some time. So government is coming in and say, wait a minute, instead of us collecting tax from these startups, we would rather give them an exemption for 3 years. It's kind of an incentive, really, first of all, to encourage people to start up businesses. Secondly, to strengthen or support those who are existing and have that investment that my colleague has talked about. But also thirdly is to ensure that the private sector is actually doing much more to increase, because if you give an incentive and you exempt me for 3 years, you're giving me an opportunity to actually do everything that I can, put in place my systems, those business development services, and ensure that you're on a better standing to start paying. But also the other aspect is that you're aware that Uganda is the most entrepreneurial country in the world. But research have also shown that people start so many businesses, but these businesses don't even reach the second or third birthday. Because so as government, I think there is a study that has been done to understand how come that very many of our people are willing to go out there and start a business. Could it be tax? If it is tax, then let us exempt them from paying the tax, so that in the 3 years they are able now to be strong enough to manage the shocks, the external shocks, the competition that comes with businesses. Maybe at that time they would have developed their market linkages, they have maybe introduced maybe also technology that would enhance their businesses. So for me, this proposal is one of those that as Parliament we've really been waiting for. Because you can't stand out on the other side, we are very entrepreneurial. Then the next side, we are saying they don't even reach 2 or 3 years, these businesses close down. And so I think, but also one of the things exemption does also helps them to build their capital. Remember, access to capital has been a challenge. And that's why you've seen government of Uganda going out there and say we're going to invest 100 million PDM at the parish level. If there are people at that parish, my parish, who are able to start something small. The other day I saw the media bashing, the president with the pigs and the goats. But wait a minute, that's a business. Somebody is starting something. They didn't have it. So the whole idea about this exemption is to ensure that those who have used their 1 million, for example, to buy their pigs and goats and all that, if there's any tax that they were supposed to pay, government is saying, no, we are giving you 3 years. So it's all about entrepreneurial kind of spirit to promote it. Also ensure that these businesses can access more capital and be more established, and so many of these other things that are required really for a business to be strong enough to stand alone and be able, hopefully after 3 years, to be able to pay now the tax.
Julie, as a tax expert, where are the low-hanging fruits to this, if it's made a reality, especially when it comes to investment in Uganda?
So for this exemption, you'd find that there's categories of people who may more easily benefit from it. The category that we call the presumptive taxpayers, those are people whose turnover ordinarily does not exceed 150 million. The current tax legislation requires that if you have a turnover of between 10 million per year to 150 million, then you're paying income tax at rates between 80,000 to about maybe 900,000, depending on where your turnover lies. But for the other businesses that are above the 150 million, it will be interesting to see how it works out. Because ordinarily, if you look at the way businesses work, you'd find that in the first year as a business, you already have a lot of its capital allowances. You have invested assets, you have startup costs, which ordinarily you are granted a deduction for when you're looking at what should be taxed. And you'd find that most businesses in their first year of income, second year, would find themselves in a loss position. So it's one of those things where we need to see how exactly, whether it will actually benefit the businesses that would normally find themselves in a loss position by virtue of the fact that this is their first year of operation, this is their second year of operation, and maybe then it speaks to government considering to extend it further so that when you're done exhausting your startup allowances, then you can still have an exemption for income tax, subsequently.
All right.
Honorable maybe Agnes, to add just something on that one of the key things that the government is looking up into is job creation. Remember all these startups with this kind of investment we are talking about, even if it's a cleaner or a security, an accountant, really we expect that these startup businesses should be able to provide jobs for our people.
From a government point of view, how would you measure that you've actually attained these things?
No, I think you're aware that actually yesterday we were meeting the Uganda Bureau of Statistics. That's their role, that every year they're supposed to do a study and do research and tell us how many people have actually gotten I've gotten new jobs, how many businesses have opened, then the revenue people are easily telling us. And remember, some of the things that this bill will require is actually compliance that you've talked about. Yes, we are going to exempt you, but give us the records of how you're doing with your startup or you're doing with your business. So that compliance process, it's all digitized to be able for government to be able to monitor, and after 3 years decide whether this business can actually be strong enough to then pay the taxes based on the records and the compliance measures that have been put in place.
Honorable, still putting you on the spot. Now we see the government taking on the position of loss. With the exemption to these startup businesses, and so but government cannot make losses. So where do we intend to get that money that has been coming through from these startups? Where do we intend to who are we actually taxing this to now?
No, I think it's not about a loss,
because the tax burden seems to remain the same.
I don't think
the tax base seems to remain the same.
I don't remember, actually it's good that you brought the idea of the tax base. That studies have shown that actually that the more incentives you give to people, to the private sector, the more revenue you're likely to generate in the near future. For example, after the 3 years. Remember that we have the excise duty, which is proposing about 10,000 or 100, proposing on the imports on cigarettes. Yes, I mean the excise duty is importing, imposing 10,000 on those on some imports that are not using locally using local raw materials, right? They're even taxing beer, for example, additional, is it 250 shillings on top for those who are not using also locally made, and those who are using our locally grown barley and all those materials, raw materials that are needed to produce beer, they're putting on more tax. So government, the other access or avenues or measures that has been going on will continue. So it's not about loss or profit or something. I think what government is trying to do here is basically on the other principle of taxation of equity and fairness. Is it okay that we have the big businesses which are able and doing everything, but you also have this other side of the small businesses and startups who are struggling? If it is because of tax, let's give them the exemption so that they are also able to compete favorably in the competitive.
Julie, analyzing this as a strategy, and it brings into question compliancy. What recommendations would you have government maybe utilize in order to see that there is full compliancy from the said sector?
So I think one of the things that, like Honorable has said, that government has tagged this exemption to is the fact that for you to be able to benefit from it, you need to demonstrate that you have a history of compliance. The bill talks about a return that the commissioner needs to design for people to provide certain information around the suppliers that you're dealing with, revenue sources, the people that you're employing. So, they call it a business return, which is different from the corporation income tax return that companies ordinarily file. So the expectation is that when URA gets that information, they'll be in position to review and assess the level of your compliance, how even the people that you're dealing with, there are certain things that they require from you. Are they tax registered? Do they have tax identification numbers? So that at least there's that demonstration that there's no leakage of revenue from that angle. So we expect that, if that return is designed and that information is being assessed, reviewed before the exemption is granted, then there may be a certain level of compliance that will be achieved.
All right. Yeah. The same bill also proposing an extension of the tax exemption for the Bujagali hydropower project until 2032, a move aimed at maintaining affordable electricity prices, but also supporting the ongoing industrialization efforts. And we believe that that's from a good-spirited heart. Let's go to the exercise duty, Julie, the breakdown of that.
All right. So from an excise duty perspective, we've seen a couple of changes there. There's a proposal to increase excise duty on beer that is made from local raw materials. And also the other big one from excise duty is the cigarettes. We're seeing the local cigarettes being proposed to have excise duty increased by 10,000 shillings, and then I think per 1,000 sticks. And then for the imported cigarettes, we have a category where the proposal is to increase by 75,000 shillings, and the hinge lid cigarettes being increased by 100,000 shillings. So I think what we have seen previously is that those are two sectors that have been stable in the last 5 years, and it's probably why government is coming to tax them now, because we've not seen any movement on excise duty on alcoholic beverages, on those beer categories of beer and cigarettes. I think then it's a question of whether the rates that have been proposed are tenable, because if you're looking at increasing excise duty by almost more than 50% for the cigarettes, then that may have an adverse impact on the industry. The other thing that we are seeing from an excise duty perspective is really around aligning. When you look at plastics, plastics have been a big deal for the sector. In fact, a couple of years we had the excise duty bill not being signed because, you know, the failure to align with the plastics. But now we are seeing, while the previous bill had proposed, had introduced tax on all plastics, which meant that even if you're looking at those buckets that you're using as primary school children, all those were subject to excise duty under the current law. But now government is narrowing it down to reduce excise duty to be only applicable to what we traditionally call the kavera, what NEMA intended to target for environmental protection. So I think that is a good move because it was not equitable to have things like basins, plates, cups that are being used by even children in schools being taxed. The other thing from an excise duty perspective would be around, would be mainly, we've seen the fuel, but like we mentioned earlier, the fuel was there in the excise duty bill. There was a proposal to increase excise duty on diesel by 150 and on petrol by 100. But I think because last year excise duty was increased on fuel and government has already been taking steps to see that the fuel prices go down, the minister came in and halted that proposal before it could even be proposed by the before it could be discussed by the committee. So that's another good one. That's another good proposal that we have seen has been left out for to curb inflation and really to support the economy to continue growing.
All right, Honorable Agnes, as you respond to that from a government's perspective, my first question is, why have we as government failed to ban this kavera? Because it is surely causing us a lot of floodings in our cities, in your hometown, and other areas of the country. Kavera has become kavera, but twice now the government has failed to pass a ban on kavera.
I think we need to look at the kavera per se, the plastics generally, in about two different perspectives. One, of course, is the element of the climate, conditions that some of these products bring to the country or to the environment, and the floods and all that, as you talked about. But there's also the other aspect of jobs. You've seen also our young people and women picking them up and taking them to recycle. I think what we need to be talking about as a country is how do we regulate what kind of kaveras? Because even in that kavera, there are different types. I think they call them macrons and all that. And there are those macrons that actually is not as dangerous as others. So I think we need to start having a discussion of, as we phase off. Of course, we should be talking about removing it completely in the country. But there are those situations and conditions that as a government find ourselves in, that what happens to all the factories, what happened to these young people, and what happened to the products itself. Will my people, for example, in Amolator, be able to afford those paper bags and for carrying and for doing all these things, like my colleague was saying, those buckets and the jerry cans and all that. And generally, as a country, development is a process, right? We cannot stop now and then jump our people from this level to the other, and yet we have those fiscal conditions that our people may not be having that. So for me, that's the context, that the climate change is really there. We need to address it as yesterday, but also now we need to get back on the other manufacturing context, that can we go in there and regulate the kind of products that they are producing, and with time actually phase it off completely. I think also as we ban all these things, our people need to be made aware of the consequences of some of these products, right? And so for me, introducing such a tax is that one of the measures and the steps that government is now taking towards that direction,
okay, so
of banning.
If we are going to put it in that regard, then on the element of the beers, especially the fact that they are being made out of raw materials from Uganda, the element of promoting raw material utilization is something that the president has been campaigning for a while in his current term. And now when you put taxes on people actually taking on that mandate and you converting their raw materials into, you know, other goods and services and products.
I think actually the object of
this... Is
this...
it a conflict?
No. I think the object of this bill, particularly that is excise duty, isn't it? The object of that bill are actually about 2 or 3 in my view. One, government wants to create markets for our local products. We are saying if you're producing a beer and you're going to use our local barley, which is grown, I think, in the eastern Uganda, we are not going to give you, isn't it? It's zero tax, right? It's almost zero. And so from that context, government wants to promote our local farmers and create market for them. So that if these people are producing beer from externally imported products, that's where we're going to tax you more, okay? So in that context, we are promoting our farmers' products and creating a market for them. Then the other aspect is actually the value addition that the president has really talked about for a while in the country. And for me, this is really a right move in the right direction, that use our local material. You're not going to export it raw, you are going to use it, you know, you're going to add value to it and bring us as a beer. Instead of buying it from our farmers, for example, barley, the way it is, then you export it, then you want us to buy your imported beers or beers that you're using other materials. So that is promoting the value addition that the president has talked about. But also in the other aspect as well, as farmers produce, these producers buy from them. Farmers will have money, they will have purchasing power, and that is how economies grow. So basically, this actually, for me, it's one of the bills that talks so much about the policy proposals and the policy issues that has been really being discussed in the country. And I think as farmers, as parliament, as representatives of the farmers and the people out there, this is one of, I think this is one of the bills that will pass really very fast, because we know it will really have a direct impact in the lives of our people. And in most cases, when tax bills come like this, usually people get it in a very negative manner. But here we are seeing that actually some of these tax proposals and bills, it's for the good of our people and for the good of our country. Okay.
All right. Let's talk about the tax procedures. Julie, on that note, I know it has 2 elements. It has the reintroduction of the tax amnesty for waiver of interest and penalties, but also replacement of current tins. People have struggled to get these tins. URA has done a good job to ensure that everyone has a tin and the tax evaluation to whatever it is that they're purchasing in this country is attached to their tin. Now you come to tell us that now you want to change that and tie it to your nin.
So I think first of all, what is coming out clearly from the bill is that is a proposal that's not going to be effective 1st July, because it's subject to the minister, you know, revisiting it, issuing certain instrument that will give us guidance on how it will work. But what has been proposed at this stage is that the government is looking at replacing what we have as tax identification numbers now for individuals with our national with the NINs, the national identification numbers. And arguably, it's one of the things that government is looking at as, you know, a form of widening tax base, because I think we get NINs right from when we are in primary school. So it means that by the time you start generating income, then government wants to have visibility of that income. Of course, it remains a question of, like the way we have teens now, you find so many people have teens, but they are not actually generating any income, and they are sitting idly on the URA database. So how that will be managed in terms of them aggregating the 44 million NINs for the Ugandans here, well, you find that probably about 70% of those are not earning income, is something that will be subject to guidance from the minister. And then for the businesses that are using tax identification numbers, the registered businesses locally, those now will be using the business registration numbers that are given by URSB. And again, we'll, at least that one is already streamlined. Every business has a business registration number. So I think for that, the business registration number may be an easier start-off point in terms of diverting away from the tax identification numbers, because businesses are expected anyway to give some sort of, to pay some sort of tax, or at least file returns to show your level of tax compliance. Then for the non-residents, because those are not expected to have identification locally, the bill is proposing that for those who will use the tax identification numbers from their home country. And of course, Uganda, looking at, for most of those countries, we've entered into agreements where, you know, there's automatic exchange of information. So if the government of Uganda wants to access your information as, you know, someone from, say, let's say for argument's sake, you're from the UK and we have that agreement as Uganda for automatic exchange of information between Uganda and the UK, then it means that the URA can actually ask the HMRC in the UK to give information about your this particular individual. So it's really a measure that will be looked at to widen tax base, but as to how it will actually be implemented and the timelines, those remain at the discretion
and it's
of the
cost
minister.
implicative on this side.
You
have the Registration Services Bureau, you have to empower it to be able to do all these changes, URA to do all these changes. And so on the side of government, the spirit behind this is?
I think we need to appreciate that we are in a digitized world. And there is no way as Uganda we're going to sit back and continue doing our things manually. So the linkages of the NIN and the TIN, to me, it's going towards a digitization of our revenue collection, but also our identification of our residents. Most of us have traveled that in those countries, when you just put your fingerprint, they're able to know who you are, where you're from, your address, what you do, the income, you know, you earn and all that. So I think in that context, our people need to appreciate that we are seeing government moving towards digitizing its processes. And in my view, this then would make doing business very easy. That you don't need to move around with your ID, you put it there, you go there. For me, starting with revenue, much as it is tagged to revenue, but it's going to take us a long way. It will address security issues. For example, people who do, you know, wrong things and there's no way to trace them and all that. I think also the other aspect is there is a lot of security, a lot of money laundering issues around the country. And some of these people, we don't know them. The system is not linked to them. And usually, as citizens, yes, people have a right to have that fear that government wants to have access to people's records and privacy. But wait a minute, I think it's the same kind of government that we expect to actually protect us with our property and all that. I remember when the issue of digital number plates were introduced, it was a big issue. But it's the same digital number plates now that is helping us to follow and know that this particular car shot somebody or stole something and all that. So I think we should be looking at this in terms of technology advancements around the world, and as a country we need to merge, but also we need to appreciate it in the aspect of those, you know, money laundering, like these fake money people and all that. Now, if they're in business, this process should be able to identify for us these people.
All right, Juliet, the customs duty and stamp duty also do have amendments that have been proposed by the Ministry of Finance. Which ones are those?
So those are minimal. For stamp duty, it's really just aligning. I'm sure you've seen previously we had the Revenue Authority knocking at most of the banks and other companies, asking them to declare stamp duty on contracts. You know, all manner of contracts, whether it's contracts with your staff or contracts with your suppliers. So there was that ambiguity as to, you know, how far back people ought to declare that tax. And we had a few companies going ahead to comply. But now with this amendment, we're seeing that the proposal is to remove stamp duty on all such documents, so that, you know, there's clarity that there's no stamp duty for such contract and for such contracts. And also the other one for then customs, this has come in through the external trade bill. We have, there's an introduction of a 1% import declaration fee. And what this means is that 1% will be levied on all the goods that people import for home consumption. Right now, when you look at the customs duty regime, we had you know, the import duty, which is on average 25–35% depending on what you're importing. We had withholding tax, we had VAT, we have excise duty, and we also had we had an infrastructure levy, a 1.5%. And when that was introduced, the basis was for government to collect revenue to support with development of, say, the standard gauge railway and other infrastructure projects. So the 1.5 was already existing. But in addition to that, we now have a new 1%, which will be applicable on most of the goods, apart from, you know, there are a few exemptions for plant and equipment. And things like that.
Our time is fast spent. Honorable, I'm going to give you the closing remarks, especially in regards to reliance on debt and increasing our financial autonomy.
Yeah, I think we need to, our viewers need to appreciate that introduction of tax bills by government is a very positive. We should take it in a very positive way. That as a country, we need to generate as much more revenue as possible, reduce on the debts that we go and borrow, pay with interest. If we can only, for example, the examples we've been sharing here, increase our tax base, increase our revenue generation, support our private sector as these bills are trying to do, then we should be in a better position as a country with, you know, kind of at least some favorable balance in our, you know, budgets with revenue.
We wait to see the realization of the things that you have said. Thank you so much, Honorable Agnes, and thank you so much, Juliet. That brings us to the end of this discussion.